weird 25 years. Is that on your radar at all?
Our international sales are a small part of the overall company. Now, we do ship to 40 countries around the world. We've not heard any of that feedback as of yet. I think as we get further in the year and the tariff structure settles out to where it's going to end up being, I expect there'll be some additional discussions around that, and we'll hear more feedback from some of those countries.
How do you guys kind of deal with the rising commodities prices? I remember writing an article a couple years ago when lumber was just absolutely soaring, and I wrote about like wood alternative companies doing really well in the face of that. But I imagine that you do have to source some materials, and if inflation does persist, is that an issue?
Sure, inflation absolutely hits our business. During the pandemic, we raised prices like many other building product makers. We also have a strong internal improvement program where we look at all of the costs that we can control and understand how can we take cost out of the business so that we can fund some of those cost increases internally. We know every year the cost of labor is going to go up. Certain commodity costs are going to go up along the way. How much of that can we fund by our own internal engineering, R&D efforts, and our own efficiency efforts? But sometimes we do have to take pricing to be able to cover those additional costs.
One of the big selling points of Trex is just how long it lasts. This idea of not having to replace a deck for 25 years, for example. That also means that when somebody purchases the product from you, they're probably not going to buy anything else from you. How do you build a part of the business that's like not necessarily services, but more ancillary products that are add-ons? Or how do you get that existing customer who knows about Trex to spend more money with you?
Right, that's an important point. Our warranties are anywhere from 25 up to 50 years. This product will last a long time. But the market size is such that there's 50 to 60 million decks in North America. Half of those decks are at or beyond their serviceable life. Today, composites account for about 25% of the volume of decking that's sold. So there is a large opportunity out there to go convert more of that wood business into Trex composite business.
Is new business still wood business? Like, are people still building wood decks?
People are still building wood decks, yes.
Why are they doing that when when they're in that moment of truth where they're choosing their material, why are they still going with wood?
A lot of it is because that's what they know, that's what they've done in the past. So the challenge for us is making sure that we're in front of that consumer while they're making that decision, showing them that we have products. In the case of the decking product, our Enhanced Basics is roughly 2 times the price of lumber. So for an extra $800, you can have a Trex surface on your deck. And prices go up from there. For an extra $500 on top of that, move up to our next line, our Trex Enhanced Naturals product line. So it's really important that our marketing engine gets in front of those consumers before they're making that final decision.
Social media. I've seen some of your social media content.
Oh, yeah. Trex TikTok, is that what it is?
Well, it's other people on social media
Very
posting
active,
about
yes.
their deck.
Oh, interesting. I haven't seen that. Hey, Brian, thanks for stopping by. It's been a couple of years. Do appreciate you taking the time. Brian Fairbanks, President and CEO of Trex, joining us here in the Bloomberg Interactive Brokers studio. We are just shy of 25 minutes until the close. The S&P 500 off its worst levels of the day, still down about 1%, as is the NASDAQ Composite. The Dow down 1.2%. Coming up next on Bloomberg Business Week Daily, we're driving to the close.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ very much in the red. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
Hey, good afternoon, Troy. That's right. U.S. stocks are under pressure as tariffs are back in focus. Trump announced plans to impose higher tariffs on several countries, including Japan and South Korea. The Dow is currently down 534 points. S&P's dropped 62, and the NASDAQ is lower by 1%. The U.S. 10-year yield climbs to 4.39%. Gold is little changed. Oil is in the green, but Bitcoin, that's lower by 0.4%. Among the main 11 S&P sectors, all were trading in the red, led by declines in consumer discretionary and energy. And leaders to the upside in the Dow, Boeing and Walmart, while Sherwin-Williams fell 2.4% and led to the downside. In deal news, CoreWeave to buy Core Scientific in a $9 billion deal. And wrapping things up, Uber traded to an all-time high. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
The funky music will drive us till the dawn.
on Bloomberg Radio.
Well, look at that. Already time for the drive to close. Less than 20 minutes to go for the close of equity trading here. Not on our worst levels of the day, off our worst levels of the day, but still down 1% on the S&P 500. The NASDAQ composite down about 1.1%. Let's bring in Ed Harrison. He's Bloomberg News senior editor and the author of the Everything Risk newsletter. He joins us from the Bloomberg Washington, D.C. Bureau. Ed, good to have you with us this afternoon. Tariffs front and center, of course. Trade policy front and center. I'm trying to understand how traders are digesting what we're hearing from Washington, D.C., because at the end of the day, it seems like we're essentially kicking the can down the road to the end of the month. At least that's how Brendan Murray, the trade czar, put it to us earlier today. Is that the reaction that we're seeing in the markets?
That's definitely the reaction that we're seeing in the markets, because when you look at the trend line of the day, you can sort of make out the Japan, South Korea down kick, and you can make out the down kick that we got from South Africa, but it's all within the trend line. And when you look at what happened on Liberation Day as an example, we were down 5%. We're down like 1% on the S&P 500. That's not a discernible difference relative to what we already knew coming into today, which was that we were going to be trending down.
When you look at the bond market here, yields are higher across the Treasury curve, but particularly in the longer end of the curve. The 10-year up now to 4.3%, and yields higher on the 20 and the 30-year. What is that telling you about how these bond market traders are thinking about the deficit, the future of inflation, particularly in the backdrop of this big, beautiful bill coming into law?
Yeah, it's interesting because when you look at the announcement in April, what we saw is equities down, bonds up. But then later, once it became clear that Trump was backing off of the tariff somewhat, we saw that bonds sold off and yields went up. So I think that what we're seeing today is that we've seen a lot of tariff action, and therefore traders are looking through the announcement today, and they're looking at, talking about Emily, which is the deficit, the inflation, and the supply that's coming out of the Treasury, and they're selling bonds off.
Ed, when we were seeing this news come down about the extension, and again, this executive order hasn't been signed. We are expecting President Trump to sign an executive order this afternoon that extends the tariff deadline to August 1st. One thing that kind of kept coming up was, is this an example of him not following through with what he said he was going to do? Like, not necessarily is this the art of the deal, but is this more bluster than it is substance at this point?
It's really hard to know until we actually get a final decision from him. I think you can look at the TikTok extensions as a similar sort of thing. It's like he wants to get somewhere, and if he hasn't gotten there, he's willing to kick the can down the road until he does get there. But he's going to increasingly use arm twisting to get where he wants. We can say the same thing with regard to the legislation that passed this past weekend. He set July the 4th as his deadline, and he did get to that July 4th deadline with some arm twisting right at the end. But that's really his modus operandi is to kick the can down the road, increasingly use the stick instead of the carrot right at the end of that, and hopefully get to where he wants to go.
Ed, you write in your latest Everything Risk column that Trump needs to be careful, and we're in a make or break period for the U.S. economy right now. Just tell us a little bit more about what you're seeing in the economic data right now that makes everything just all the more high stakes as the president is trying to deal with all of these negotiations and new legislation.
Yes, I thought it was interesting. The numbers that we saw last week were relatively benign. What we saw in terms of the unemployment rate, what we saw in terms of non-farm payrolls, those were the headline numbers. But really underneath it, there was a lot of weakness, which goes with the weakness that we've seen earlier. We saw jobless claims up. We've seen that on initial claims and on continuing claims. We've also seen that in that report that our earnings were slowing down, and many of the jobs were government jobs. If you looked at the private sector economy, we actually added fewer than expected. So it's clear that the employment market is slowing down, and that the establishment survey is showing that people are having more difficulty getting new jobs, and there are not as many jobs being created. And so you add in a big kick to that with regard to tariffs. That's a shock to income. And potentially you could see a very big slowdown, and that's very bad for earnings in particular. And I think that that's what we're going to see, because there's only so much margin pressure, so much margin you can eat as a company before you really have to start laying people off or increasing prices.
Yeah, you mentioned earnings, and I wanted to ask just one more question on stocks here. You talk about overvaluation in your column, and I do feel like that's something that, you hear investors talk about all the time, and yet, we still have seen a pretty healthy rally in the equity market since those April lows. What's different this time? Do we really need to be concerned here about the valuation of the S&P?
Well, it's interesting because I was looking back at Japan 85 to 89 over the weekend, and, we had PEs of 50 to 70 times earnings. And it shows you that as long as the economy is growing, really, it's almost like the sky's the limit. So we don't really need to be concerned just from a pure, momentum perspective. But the higher the valuations go, the more downside risk there is when you have a growth hiccup, particularly a recession, because that's when the valuations will normalize.
You know what's interesting? We only have a minute left, but we keep hearing over and over again that the consumer is strong. We saw a strong payrolls report last week, even though the ADP report ahead of it kind of had a few people concerned. The tariffs don't necessarily seem to be wreaking havoc the way that people thought they would, and partly that's because they haven't totally been implemented. How would you describe the economy right now, just in 45 seconds, and just how it is?
Well, I would describe it as in a waiting period. Interestingly, tomorrow is the day that Amazon begins their Prime Day sales. I'd be very interested to see how those come about, because we're now in a period where all of the pull forward demand from pre-buying before the tariffs, that's all gone. Now we're going to get to see what the economy looks like in reality, and I think that this Prime sale, which is a 4-day period, that's twice as long as it was last year at this time, is going to be a very good example of, does the consumer really have that extra oomph to go forward? Yeah, we got to start calling it Prime Days, not Prime Day. I mean, it hasn't been a day in years, I feel like. Ed Harrison, Bloomberg News senior editor, author of the Everything Risk newsletter. Subscribe to the newsletter. Check out Ed and the team's work. It's great stuff. Coming up next, our cross-platform coverage.
This is Bloomberg Business Week Daily with Carol Nasser and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. Let's take a look at the indexes right now. They're down, but off worst levels of the day. The S&P 500 down close to 0.9%. The NASDAQ down. Go ahead and round that up to 8%. The Dow Jones Industrial Average, which Emily Graffeo always reminds me is not worth paying attention to, but I still tell people what it's doing.
That's what we were taught in Bloomberg News intern training, you know? A couple summers ago, that's what I was told. So, well, it's only 30 stocks.
I would like to take intern training.
Yeah.
It sounds like you learn a lot.
Yeah, no, you do. And they give you the Bloomberg Way. You have a copy on your bedside table, right?
Yes.
Yeah. So
and in my desk.
You study that. And then, well, I got the extra. I got the Tom Keene intern training as well because I worked for him.
You have to pay extra for that.
There's a little bit extra training that I think I was one of the lucky interns to get that as well.
You are one of the lucky ones. Oh, I love that. Hey, there are a lot of stories that when we're doing our editorial call every day, we kind of go through. We have the pre-booked guests. We have the big news that we're doing, and there's also the stories that are on our radar that we want to make sure we get in, and that's really where this one comes in. It's about what's going on with retail right now, specifically with Saks. The $2.7 billion acquisition of Neiman Marcus by Saks Fifth Avenue's owner last year. This was supposed to create a luxury powerhouse. Instead, both department stores are losing customers and sales to competitors, including Bloomingdale's and Nordstrom's.
So we have a Bloomberg second measure, and it tracks debit and credit purchases.
This is really cool.
Yeah, so it showed that sales at Saks fell 16% during the quarter that ended in June from a year earlier. And then during the same period, combined sales at Neiman Marcus and Bergdorf sank 10%. The slowdown accelerated over the 3 months. And then meanwhile, sales at Bloomingdale's, which is owned by Macy's, and Nordstrom both rose more than 10% during the same quarter. I'm sensing, you know, a bifurcation here, or maybe a higher-end consumer stepping down. Of course, Saks and Neiman Marcus are kind of known for that more higher-end consumer.
I think that's fair to say. These revenue figures also show the magnitude of the challenges that are facing Saks Global. The combination of the department store chains, this is what it's called. It's a closely held company. It's trying to reverse a sales decline, and it took on more debt in part to pay vendors $275 million in overdue bills. Bloomberg's second measure data may not fully capture the sales trends at these retailers because it analyzes more debit than credit card purchases. Shoppers at Neiman Marcus, Bergdorf Goodman, and Saks customers often use credit cards more frequently than middle-income shoppers at other outlets. So there is some nuance to the data. But the second measure data, which is available on the Bloomberg terminal, Bloomberg second measure, essentially analyzes what people do when they swipe. So you get this, it's a source of alternative data.
Yes, high frequency. I have like a hot take.
What is it?
I think that the stores should be real stores again, and maybe that would help their sales.
What do you mean?
Like, don't you want to go into a store and you want...
I don't want to go into any store.
I want to go into a store and I want racks and racks of clothing and shoes, and I want to try everything on in the fitting room.
Okay.
And then I will buy. I think stores and retailers are pivoting to online too much. So then the brick and mortar store, when they only have like 3 items in there, of course you're not going to buy anything.
So you bring up like the existential crisis that's facing department stores, like the stores that we grew up going to, and the way that they've been displaced by online retailers. Essentially what these stores have been trying to do over the last decade is offer something in store that you just can't replicate online, and that is trying things on. I guess the flip side of that would be like a Zappos, for example, that's like, hey, order these 5 pairs of shoes, shipping both ways is free, send us back the 4 pairs that don't fit.
Yeah, I mean, I don't like that. But I don't want to go into a store and there only be like $600 shoes in there.
Fortunately, our office is right next to Bloomingdale's. And that's still one of those stores, right?
Well, yeah.
Is it? I don't know. They have frozen yogurt.
They do have frozen yogurt in there. Yeah, they have some clothes. I miss Lord and Taylor.
Okay,
I'm just
that's
a different story.
Okay. There's like a WeWork angle there that we could talk about at some point.
Yes.
Hey, don't go anywhere, because coming up next, we are joined by our Bloomberg TV team for our cross-platform coverage on radio, TV, YouTube, and Bloomberg Originals. The closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Shanali Bassick, taking you through to that closing bell with the global simulcast. It starts. Tim Stenovic joins us in the radio booth. Emily Garfeo in today for Carol Massar. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube. On a decidedly down day, Tim Stenovic, that seems to revolve around uncertainty about the U.S. trading relationship with the rest of the world.
We have certainty on Kazakhstan. We have certainty on Laos.
You went straight there.
We have certainty on Myanmar. We've got certainty on Malaysia, South Africa, Japan, and South Korea. Although, to be fair, maybe it's not certainty. Maybe those are just sort of opening salvos. That's what I'm trying to figure out. I think investors are trying to figure that out, too.
And investors today, they were selling stocks. They were also selling treasuries. I will point out, though, that the dollar index, the Bloomberg Dollar Spot Index, was higher today. So that dollar getting a little bit of a bid.
Yeah, I'm glad you brought up the dollar. It's becoming a talking point, isn't it? Because even though it's getting a big bid, it's still hovering near the lows of the year. And we're watching a worry here about whether there is an issue of importing inflation while this tariff strategy gets sorted out.
Yeah, and I just want to point out, too, just for our viewers and more importantly our readers on the Bloomberg terminal and Bloomberg.com, there is really a great tracker, basically a tariff tracker that we've done, because it's kind of hard to wrap your head around it. Tim, you were rattling off a few nations there. I mean, I couldn't even remember which countries were still in play.
I was looking at the live blog, though, to do that. Yeah. I mean, you can't remember this stuff. We spoke to the Trek CEO a little earlier. He said uncertainty. I mean, he doesn't know what's going on. It's uncertain.
Yeah, no one does. And remember that a lot of the tariffs we're talking about today, these are those non-sectoral tariffs, basically the across-the-board ones. This doesn't necessarily impact those sectoral tariffs, the ones on autos, the ones on steel and aluminum, et cetera, et cetera. So a lot for investors to parse, and that's a big reason why a lot of investors may be looking for the door. The Dow Jones Industrial Average down more than 400 points, or 0.9%. The S&P down 49 points, or 0.8%. The NASDAQ Composite is going to close out the day down by 0.9%. And the big decliner on the day, that's the Russell 2000, a drop of 35 points, or 1.6%.
A decidedly down day, as you mentioned, Romaine, in the S&P 500. Only 96 of these stocks did move higher today. 404 were decliners.
Listen, we're looking at a broad-based decline as well in the S&P 500. Most major sectors were definitely in the red today, led down by consumer discretionary, which carries Tesla. So don't be too taken aback there, because we did see also very significant drops in materials, energy, financials, and communication services as well. Really only two sectors in the green. Staples, defensive trade, utilities. Got to still buy those picks and shovels, guys.
All right, well, speaking of buying, I was able to find a few stocks in the green today. The best performer on a percentage basis in the S&P 500 today, look at that. It's Tractor Supply up 3.9%.
Oh, wow.
Rose today, the highest intraday level going back to April. This is thanks to data from Bloomberg's second measure. It says that adjusted sales observed by Bloomberg's second measure rose 4.3% in the second fiscal quarter. What Bloomberg's second measure does is it analyzes swipe data, mostly from debit cards, to get an understanding for how people are purchasing and what their consumer behavior is.
Yeah.
The data does draw from a sample of credit and debit card purchases made by U.S. consumers. Analysts currently estimate revenue for the quarter up about 3.6%.
Have you ever been in a Tractor Supply, Tim?
I have not been in a Tractor Supply. Where I grew up, there was like a local version of Tractor Supply called Farm Supply.
Okay.
So I used to go there all the time.
Interesting.
Yeah, that's where I would get my bag bomb, horse feed, those sorts of things.
Oh, okay.
Have you been to a Tractor Supply?
Yes, I have.
Where?
In suburban Maryland.
Do you remember how popular they were during the pandemic?
I do.
What was that?
I have no idea, Tim.
Okay, we'll move on. From Tractor Supply to rockets, I want to look at Rocket Lab Corporation. RKLB US is the ticker. It's a space company. It's seen as an alternative to SpaceX for some things. It was up 9% today. This always moves, well, I don't want to say always, typically moves higher on days that you see Elon Musk and Donald Trump kind of go at it. Look, Rocket Lab is tiny compared to what SpaceX does and can only do a fraction of what SpaceX does. No question SpaceX is the market leader. But if investors are looking for companies that could be alternatives to some of what SpaceX does, they look at companies such as Rocket Lab, and that's why you have shares higher today by more than 9%. And Wolfspeed in the green today. This has been a decliner for quite some time, up more than 95% today. They filed for Chapter 11 bankruptcy late last month. They named a new CEO, Gregor Van Issum, as CFO and EVP, effective September 1st. He does succeed Kevin Spirits, who will return to his prior role of SVP for finance. Once again, shares of Wolfspeed up 95%.
All right, and looking at some of the decliners today, let's start with Tesla. That stock falling 7%, almost $70 billion of market cap wiped out in just one day. And this is coming on concerns that Elon Musk's move to form a new political party, a third party, will draw backlash from President Donald Trump. We saw analysts weighing in on this. William Blair downgraded the stock. They said they would prefer Musk to focus on the robo-taxi rollout. And the broker also noted that Trump's tax bill is set to cut demand for Tesla's emissions standards credits. So that stock down 7%, closing out the day. I'm also watching shares of Stellantis. U.S. shares of Stellantis fell as much as 5.7% as Bank of America cut the automaker to neutral from buy, with the broker expecting to see a, quote, very weak first half report on July 29th. And then additionally, the auto workers union warned that the company's Italian car production cratered by a third in the first half and is poised to sink further this year from multi-decade lows. Again, that Stellantis positioning in Europe doesn't look good, at least according to Bank of America, even though the U.S. appears strong. And then finally, Core Scientific, ticker Core Z, shares were down 17% to close out the day. And this is after CoreWeave agreed to buy the company for $9 billion in an all-stock transaction. Now, analysts are positive on the deal for CoreWeave, but they said the negative reaction in the Core Scientific stock could reflect disappointment with the deal terms, and it really was disappointing. It fell as much as 24% and then pared those losses just a bit, but really down in the red today.
Yeah, phenomenal move in Core Scientific that really kind of defied, at least on the surface, some degree of logic. Meanwhile, a lot more logic to be found in the Treasury space. You did see that Treasury curve re-steepen here with yields on the longer end of the curve up about 6 basis points on the 30-year, and on the 2-year yield, the shorter end of the curve, only up by about 2 basis points here. And a lot of this seems to be based on the idea of the longer-term risk, potential risk, perceived risk right now going on in the United States and the compensation that investors would demand to take on that risk.
You're talking about bond yields. I'm thinking about egg bites. At Starbucks.
At Starbucks.
You know Brian Nickel, former CEO of Chipotle.
Oh, yeah, I
really turned that company around. He was at
California
Yum Brands,
guy.
did Taco Bell. Yeah, Newport Beach, right?
Yeah, absolutely.
So he did the Doritos Locos Taco. Not exactly health food.
Yeah.
But now they're trying to sort of make Starbucks healthier right now. And what he's doing is he's...
I don't like the sound of that.
Trying to take out canola oil from some of the products at Starbucks, from its food menu. What's wrong with canola oil, you ask?
Well, in June, Brian Nickel pledged in a meeting with U.S. Health and Human Services Secretary RFK Jr. to further align the chain's menu with the Trump administration's health priorities. So this move does seem to be I'm sorry,
what? The health priorities? So the priority is what? To kill off corn farmers? What I'm sorry.
Maha.
To make the egg bites healthier, I guess.
Yeah.
Did they say what they're replacing it with? Oh,
avocado
yes.
oil.
Avocado oil.
Yeah. Here's the thing. Seed oils have a really bad rap, and they've increasingly had this bad rap. And it's become political because
avocados come from Mexico? Is that, does that
there's literally a company called that.
The only good thing about any of this is that you're used to already spending more than you'd like in any given day at Starbucks. So
right. I just do
the idea of it getting more expensive is just, another reality of the situation.
We should note in this piece that even though seed oils have this bad rap, there's been meta-analyses that have found that you're not likelier to die of cardiovascular disease, or it doesn't necessarily bring inflammation higher within the body if you do eat some of these seed oils, even though they are being targeted by Robert F. Kennedy.
What'd you have for breakfast this morning, Tim? Yogurt and fruit, let me guess.
Yeah, I did have some yogurt and fruit.
How about you, Chanel?
It's not fair. You walk by my desk and you see what I'm
Yogurt and fruit. Emily, save us here. What'd you have for breakfast?
Yogurt and fruit.
Oh, no.
Anyway, all right. Speaking of
That's what
yogurt.
we serve at the office.
Okay, all right. Well, we got a bunch of healthy people here on the show, -1. Did any of you get out this July 4th weekend and go to the movies?
No.
Okay, well, some people did, and they saw Jurassic World Rebirth. which I'm told is they're scrounging around. Look at that. Is that Scarlett Johansson there? Is Jonathan Bailey? A few other people in this movie trying to get the DNA from these dinosaurs so they can, I don't know. I haven't seen this movie, so I have no idea what happens next.
This is the 7th one, right?
I don't know. I've only seen the first one, believe it or not, which I think pretty much came out 57 years ago.
I've only seen the first one also. No, they came out like the 1990s. That was the first one.
I was a child. I know that much.
Yeah, I was as well. And I guess probably we're the only two people who've seen this. Movie, right?
Shanali, have you seen this movie?
I have not seen the first Jurassic Park. I will not see the last Jurassic Park.
You've not seen the first? What?
But I do appreciate ScarJo walking into it like she's about to step into Top Gun. So.
Well, it was a big box office hit, and I guess some people did find a way to just spend the weekend, as we often used to do in the past, in the old days. Spend the holiday weekend at the movie theater.
Yeah, I'll go see that movie. Who doesn't love a dinosaur? Pretty good showing for the weekend too. Hey, that is going to do it for our cross-platform coverage of the market close on Bloomberg TV, Radio, YouTube, and Bloomberg Originals. We will all be back tomorrow, same time, same place.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, well, the S&P 500 is hovering near record highs. We're down, we finished the day lower, but I want to bring into the context here that we had multiple record highs hit last week. And this, of course, is after it gained 25% since its April tariff-induced lows. But will that run continue, or are stocks getting overvalued now? If you look at the economic outlook here, the U.S. economy seems like it's holding up. Hiring is healthy. Inflation has remained relatively tame, but the U.S. tariff pause is ending soon, and questions are lingering now about the impact of Trump's tax bill on the deficit and overall economy. Here to help us understand all of this is Louis Navellier. He's the chairman, founder, and CIO of Navellier & Associates, and he's here with us right now in New York. Welcome, Louis. It's good to see you.
Good to be here.
So maybe we'll start here on the economic impact of the big, beautiful bill, because it was signed into law. And there's a lot of questions here about what this actually means for Wall Street and what do investors need to be thinking about?
Well, it just provides more certainty. And obviously, I think 90% of people are going to get more money in their paycheck. So that's good. And then they either spend it or they put the money in the bank, and the banks buy the treasuries. So we shouldn't worry about an increase in treasury yields. I'm really curious about these tariffs. The Financial Times reported the other day that the tariff revenue has exploded. It's at $24.2 billion in May. It's going to go probably $60 billion or more. And of course, Howard Lutnick wants that to offset the spending cuts. So, of course, he'd like tariffs to replace everything, including income taxes. But I don't think Howard will get his way. But
why don't you think Howard will get his way?
It's just overambitious. That's all.
Do you think it's a good idea, though? I mean, do you think the tariffs are a good idea?
It's a good idea if it's an efficient way to collect money, okay? So if they have to spend $10 to collect $100, that's not efficient.
Do you view the tariffs being a tax on the U.S. consumer?
No. And
a lot of economists would say that's what they are.
But here's what's, in my opinion, what will happen. So we have 10% baseline tariffs. That will largely be offset by appreciation in the dollar. I know the dollar's down this year, but it's going to go right back up because we have the highest rate, strongest economy, et cetera. So that's going to offset it. Now, the countries that cooperate with us, Britain, Australia, they're not going to have any reciprocal tariffs, okay? This is a big game of chicken to force everybody to buy U.S. ag, U.S. energy, and something from the U.S. And the export growth is going to help GDP, and so I'm very, very bullish on it. But it is a big game of chicken, okay? And when you get in a bureaucracy like the EU, it doesn't look like it's going to work out well.
What happens, with the games of chicken that, we used to play in the pool back in the day? There would be a winner and there would be a loser. There's not two winners in a game of chicken.
Well, anytime you negotiate with Donald Trump, he wants you extremely uncomfortable, and he's very good at making people uncomfortable.
Is he succeeding?
I don't know. I think he probably is. I have to tell you, I was disappointed when Chancellor Merz from Germany came over. I'm sure he guilted him to just move all your manufacturing to America because, you know, you can build ICE cars here after 2035. In Europe, you can't.
There are Mercedes that are built in the U.S.
Yeah, of course.
There are BMWs built in the U.S.
And Volkswagen, and they're building more plants, Scout Motors, etc. But, you know, our electricity is 25% of what it costs in Germany. He said in the past, I'll give all your workers visas. Just bring them over. You know, you got 5 southern states fighting for that business. But, you know, Stellantis right now owes $3 billion to the EU because they can't make electric cars because they can't compete with the Chinese. Okay, so whatever the EU mandated isn't working. Volkswagen passed Tesla in EV sales. Great, but their profits dropped 40% because they don't make enough money on the EVs. So I think the onshoring is going to continue, and so I think long term we win, but short term there's a lot of pain and confusion and anxiety.
Does that trickle down to the stock market price action? That pain and anxiety, because the S&P 500 fell today, but it's been remarkably resilient since that Liberation Day low. I
think the pain's going to be in Mexico and Canada, to be candid with you. You just saw what he did to Vietnam, you know, 40% tariffs for Chinese subassembly. And there's a lot of Chinese subassembly in Mexico. You saw GM pull production out of Mexico to put in 4 plants in America. So this is real. This is going to be happening. And I think we're in the midst of a global interest rate collapse because other than the United States and maybe India, most countries are in severe economic duress. Also, there's no household formation in a lot of these countries. They got too old. They don't make babies. And how do you grow an economy when you're losing households?
Is that a concern in the U.S.? Elon Musk and there have been a lot of folks in the Republican Party who are pushing for more Americans to have more kids.
In the South, it's booming.
Does this become more of an issue? I've read, and I don't have the stats in front of me, so forgive me, but I've read that we would have a real issue without immigrants coming to this country in terms of population. And what happens now with the crackdown on immigration? And look, a lot of the crackdown is on illegal immigration, but I know anecdotally that even people who come here legally are not as excited to come to the U.S.
I'm not worried at all because, first of all, the South is very pro-family. The Mountain West, I have a home out there, extremely pro-family, okay? Utah is the fastest growing state in America. What do they do to real estate? They make a lot of households. Household formation creates growth. Okay, so when the society gets old, what do you got to do? Yeah, you got to have immigration. At least in America, we assimilate our immigrants, okay? They come here to work, okay? And hopefully they're not deporting the ones that are working, okay? That's another issue, okay?
That does seem to be happening.
Well, it depends who you read, of course, okay? I guess we have to get Tom Holman to tell us what's really going on. But, yeah, if you read a left-wing site, they say, you can't pick the crops and, you know, there's...
farmers have said it.
Yeah, it's a problem. Yeah. We have to fix that. And that's not right. We've always had those workers, and I don't want to bend over picking strawberries, you know? So, just a little thing about Trump. If you go to a Trump club, you know, he has foreign workers.
Last time you were with us, you had just come from Mar-a-Lago.
Yeah.
You were not a member, you were a guest, I think you said.
I live 8 miles down the street, so I get invited a lot. It's always amusing. But his workers are seasonal workers. You know, they come from Romania or someplace, and they don't have to pay Social Security and all that stuff. So he runs a lot of his seasonal clubs like they run ski resorts. Just go to a Ritz-Carlton before ski season, you know, and they bust in all the foreign workers, and they hope it snows.
What does this mean now, I guess, kind of for your economic outlook? People talking about growth, GDP falling, just in the last 30 seconds here. Do you see that?
I think if he gets the exports up, mostly energy and ag, we will briefly hit 5% GDP growth without inflation because we're just exporting what we're good at.
Always good to see you. Usually join us remotely from Florida, sometimes from the Mountain West. So it's good to see you in New York. Louis Navalier, founder, chairman, and CIO of Navalier and Associates. joining us here in the Bloomberg Interactive Broker Studio. Just a reminder on how things closed out the day. Off our worst levels of the session, the S&P 500 fell 0.8%. The Dow down 0.9%. The NASDAQ Composite also down 0.9%. Coming up next on Bloomberg Business Week Daily, we are talking sports, entertainment, hospitality, and more. Sam Zussman, CEO of BSE Global.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. A move lower for the Dow, the S&P, and NASDAQ. And this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. The Dow, the S&P, and NASDAQ all declined today amid trade jitters, with the S&P down 49 to 62.29, drop there of 0.8%. President Trump announcing tariffs on several countries. The Dow down 422, down 0.9%. NASDAQ down 188, a drop there of 0.9%. 10-year 4.38%, with the 2-year yielding 3.89%. Gold flat on the day, $33.37 the ounce. West Texas Intermediate crude oil up 1.6%. WTI 68.07. $1.67 a barrel. M&A news, CoreWeave agreeing to buy Core Scientific in an all-stock deal worth about $9 billion that will allow it to expand its AI data center capacity. CoreWeave shares down today by 3.3%, but Core Scientific plunged 17.6%. Recapping, stocks lower with the S&P down 49, dropped there of 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, Charlie, thanks so much for that update. Well, the WNBA, known as the W to fans, announced plans to expand to 18 teams by 2030, adding Philadelphia, Detroit, and Cleveland to the previously announced Portland and Toronto teams, which begin play next year. The expansion builds on several seasons of dramatic growth and comes at a time sports teams have been getting acquired for record-breaking and eye-popping amounts. So let's talk about sports and entertainment and hospitality. We've got Sam Zussman with us. He's CEO of Brooklyn Sports and Entertainment. It is the parent company of the NBA's Brooklyn Nets, the WNBA's New York Liberty, and their home arena, the Barclays Center. We're also joined by Randall Williams. He's a familiar voice and face to all of you. He's Bloomberg News Global Business of Sports reporter. Both of them join us here in the Bloomberg Interactive Brokers studio. Sam, I want to start with you. I think, you know, the brand Brooklyn is something that you are leaning into big time here with the Brooklyn Nets. Also, of course, with the New York Liberty, with the Barclays Center. But I think people outside of New York might be surprised to find that the Barclays Center, basketball is a big part of it, but it's not the biggest part of it by any means. Sort of break down the share of what comes from basketball versus what comes from everything else that the Barclays Center does.
Yeah, so thank you for that, Tim. So Barclays Center is a real entertainment mecca. We are open roughly 190 nights a year. We do somewhere around 75 to 80 concerts a year. Brooklyn Nets games around in the 40s, Liberty games in the 20s. We are the third highest grossing arena in the world. And it's not just about the content, it's also about how we do it. Our goal at Brooklyn Sports and Entertainment is to create bold and unique experiences, the Brooklyn way, meaning Brooklyn DNA, right? If you sort of think about what Brooklyn stands for globally, not just nationally, for creativity, for relentless hustle, for authenticity, for diversity. We represent about 150 different cultures. And so we want to make sure that when you come to an experience at Barclays Center, whether it's a concert or a game, you have a unique DNA, Brooklyn DNA-based experience that might be different from the experience you would have with the same game played at a different arena or the same concert played at a different arena. And we manifest that with food, with service, with ancillary entertainment, with how the venue is, and the fan experience, the audience experience is sort of first, and we manifest that.
So Sam, one of the things you mentioned was culture, and the reason I bring that up is because obviously New York City has a lot of it, but Madison Square Garden in particular has been open since 1968. The Barclays Center opened, I believe, in 2011 or 2012. You built culture in 15 years to become the third highest grossing stadium or arena in the world. What went into that?
So the work and the vision of a lot of people that came before me, but I would say it's focus first and foremost, but secondarily and maybe first is a lot of long-term thinking. So I consider us and the ownership group to be long-term builders. Everything that we do is with a long-term goal. We're focused on building generational fandom. We're focused on building the experience, the service that we provide, the training that we put in, the selection of vendors, the selection of entertainment, the selection of concerts. If you look at Barclays Center, it is only, to your point, opened in 2012. It is only 13 years old, and we've already embarked on a set of arena renovations. with over $150 million over 4 years, and we've opened several new clubs that you told me that you've been to.
Crown Club is my favorite.
Club.
The Crown Club is my favorite.
Yeah, and look, Crown Club literally is first and unique in its experience. A chef restaurant with unparalleled wine list where people come in and they're having the time of their life. You know, before
There's some people who don't even go to the games. They just go to the Crown Club and sit down there the entire time.
I think Randall needs to bring me to the Crown Club.
He's your guy, not me. He's your guy.
Right there.
A follow-up to the renovations. We're seeing this age of sports teams who have to renovate these stadiums, and the cost of that continues to go up. You guys obviously got out ahead of that. Why is that important to say, hey, we're going to put money into this, even though the stadium is less than 15 years old? You know, there's a world where the Tsai family could have waited 20 years down the line and be like, okay, now's the time. But you're out ahead of this. Why is that?
It is because we're long-term thinkers, and it is because we're audience and fan focused, right? So just to give you an example, we have taken 2 levels of suites, and we've turned them over into bowl-facing clubs, where the reason we did that was not the utilization. The reason we did that is that we noticed that the consumption pattern and the preference of the audience has shifted. People like less to run from their seats to buy something and run back and miss the game and so on. There are folks who come in. Look, when you look at overall how you experience a concert or a game, it's an experience. It's entertainment. And so if you can offer somebody the opportunity to come into a club with several hundred people, to be able to eat, drink, take that food to your seat, watch the show or watch the game, go back and forth, be with your friends, entertain your clients, it's a very different experience than buying a ticket and sitting in a seat. And so what we've observed is this is the trend. This is what people want. We've done primary research. We spoke to people. And so we want to give that experience to people. And we have not invested, we're not doing this because things are getting old, because we want to give things a facelift. We're doing this because we want to satisfy the patterns of what we hear people are wanting. And we believe in the notion of keeping everything fresh, of being leaders in thought and entertainment, and we're putting our money, to work.
I want to talk about the growth of women's basketball and the WNBA. Randall had pointed out to Tim and I that the Liberty were ranked the 2nd most valuable WNBA team, $450 million, at least by Sportico. Is it possible to get to 1 billion? And what would that look like? Talk about like how we've gotten here and where we're going.
I think it's not just possible. I think it's highly likely.
You think there's a race to get there?
Look, we're in sports. There's always a race, right? We don't, but I would say this. The race is to win another championship, to be a dynasty, to give fans a great experience, to have the best players, to take care of our players, and so on. That's what the race is, not to the valuation. You also don't dictate the valuation. The valuation comes because you do all these things right. But yes, I do think that it will happen. I think it is, famous last words, but it feels to me like it's straight down the fairway. When I joined the company 3 years ago, I have seen the average crowd go from 2,000
That's a much different time 3 years ago.
From 2,000 to a sellout.
Yep.
I have seen, I won't belabor all the key performance indicators, but attendance, ticket prices, season ticket holders, sponsorships, every single metric has gone up tens of percentages a year. And when you are at the arena, it's palatable. a Liberty game is loud. It is a party. It is a fun experience. Everyone is invested, and there's some things that you could just see. You can feel.
We're speaking with Sam Zussman, CEO of Brooklyn Sports and Entertainment. And also joining us, Randall Williams, Bloomberg News Global Business of Sports reporter. Sam, how is the consumer doing right now based on ticket sales? Are you seeing any weakness, any lack of demand in different events due to concerns that the consumer has about parting with discretionary income? I mean, there's nothing essentially more discretionary than what we're talking about here.
Yeah, you know, it's interesting. We're in the experience economy. Right? Like when you think of people buying products and services, they do that in order to save time, in order to gain efficiency. For us, it's the opposite. For us, people are giving us their time and giving us their money in order to gain an experience. And so it's quite interesting. It's in good times that people want to do it, and it's actually in tough times that people want to do that as well. And so, look, I can't exactly measure the macro, but I can tell you in the micro, if we look at attendance in concerts, it is stronger than ever. If you look at attendance in Brooklyn Nets and New York Liberty games, we are in the high 90%. You know, when you look at discretionary purchases of merchandise, of food and beverage, and so on, if you look at ticket prices, if I only had those to go by, I would tell you that the economy is doing great.
Sam, one of the things that both you and Emily mentioned was the growth of the WNBA. And I'm going to ask you about these CBA negotiations that are going on, and I don't know if you can answer that, but the players have said they want better salaries, better benefits, increased retirement, all of these things. We haven't heard much from the league. So from your vantage point, what do you think is a fair deal from both sides? Because, you know, these CBA negotiations go on once every decade.
And we only have 20 seconds.
Yeah, well, I won't use that because that is actually a topic that I should refrain from. It's an active negotiation, and so I think we should let the professionals negotiate around the table.
A good place to end it. Sam Zussman, CEO of Brooklyn Sports and Entertainment. Randall Williams, Bloomberg News Global Business of Sports reporter. This is Business Week.
4:40 on Wall Street. We do check markets all day long here at Bloomberg. A down Monday. Stocks decline due to trade fears. S&P 500 index down 0.8%. President Trump today announcing tariffs on several countries, including Japan, South Korea, and South Africa, with rates ranging from 25 to 40% effective August 1st. S&P 500 index today, as I mentioned, did decline, down just about 0.8%, down 49 points. The Dow down 422, down 0.9. NASDAQ also down 0.9%. The 10-year 4.38%, with a 2-year 3.89%. Gold flat on the day at $33.36 the ounce, while West Texas Intermediate crude up 1.5%, now at $68.02 a barrel. So stocks lower today, but what about the impact of the big, beautiful bill, as it's known, on U.S. markets? Louis Navellier is chairman, founder, and chief investment officer at Navellier and Associates, and he was a guest right here on Bloomberg Business Week Daily.
Well, it just provides more certainty. And obviously, I think 90% of people are going to get more money in their paycheck, so that's good. And then they either spend it or they put the money in the bank, and the banks buy the treasuries, so we shouldn't worry about an increase in treasury yields.
Louis Navellier, Chief Investment Officer and founder of Navellier and Associates, a guest right here on Bloomberg Business Week Daily. Tesla shares declined today, down 6.8% after Elon Musk announced over the weekend he is forming a new political party, digging deeper into a pursuit that has been a drag on his most valuable business. Again, Tesla declining by 6.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. As Charlie was speaking, we got even more tariff news. The president will impose 36% tariffs on goods from Thailand and Cambodia, 25% tariffs on Japan, South Korea, 30% on South Africa imports. We also learned about Malaysia, Myanmar, Laos, Indonesia, Thailand as well. Perhaps we'll get more in the coming days, even in the coming minutes. Fortunately, we got with us Michael Shepard, Bloomberg News Senior Editor for Technology and Strategic Industries. He joins us from our Washington, D.C. bureau. I think today, Japan and South Korea were the big ones, Michael. Perhaps we're not as big of trading partners with Thailand, Laos, Myanmar. Japan and South Korea are certainly huge. How do you look at the way that these tariff rates are being unveiled right now?
Well, you know, Tim, it's a great question, because we saw the administration back in April unveil what seemed at the time to be, you know, very high rates and, you know, caused a lot of uncertainty in the markets. And the administration then moved to drop all of those universally to 10%, pending more negotiations. And while we're seeing today in the series of letters from the president to leaders of those trading partners a much higher level for the individual countries at hand, that is still delayed when it comes to actual enforcement of that new rate until August 1st. And the idea is to give these nations, these trading partners, some time to negotiate with the Trump administration right now. Over the weekend, we heard Treasury Secretary Scott Bessent describe the deal-making pace that was underway, that they were talking to a lot of nations all at once, and there was, in fact, something of a bottleneck even perhaps being created with all these conversations happening at the same time, and probably not enough officials. There's only so much time in a day to be able to complete, you know, complex trade talks in a very short period of time. We heard Peter Navarro, you'll remember, back in April, talking about 90 deals in 90 days. Right. We're nowhere near that. And we've seen so far really 3 deals sealed and unveiled, and that's Vietnam, China, of course, and the United Kingdom, which was the first to get in line. So we're going to see these higher levels talked about, but they don't actually take effect till August 1st. So we may see them come back down, Tim.
So just to contextualize this a little bit, I've got some data that shows the largest imports of goods by country. Mexico, China, and Canada are by far the 3 largest trading partners. Japan is number 5. South Korea is number 7. Thailand is 14. Malaysia is 16. And then the list goes down. Turkey, 27. Australia 28.
So, Mike, you mentioned that, there's potentially more room now for negotiating until the August deadline. Is it fair then to be thinking about this like the Wednesday deadline is not relevant anymore because whatever happens on this Wednesday deadline could still change before August?
Well, Emily, you really hit the nail on the head right there because they, in essence, have punted this deadline, but in a different way. They are not saying that we're moving the deadline back, but it's really the enforcement date. If countries are able to negotiate something up until July 31st and work something out, iron something out with the U.S., then whatever new level they reach agreement on that day, August 1st, will take effect. And of course, the administration will always, as Donald Trump is somebody who, insists on flexibility and trying to make these agreements with trading partners and even business partners, that he is able to eke out that kind of flexibility until the very end, so that he can push a maximalist argument to try to get as much as he can up front and then reach some sort of accord. So we will have to see how much of these higher level tariffs that we're seeing right now, which do track roughly with what was unveiled on April 2nd. For instance, the levels that were announced against Japan and South Korea, which are probably the two that we're watching most closely, as you noted, they are roughly in line with what came out on April 2nd. Originally, the rates for those two countries were 24% on April 2nd. What we're seeing now in these letters is 25%, and it's negligible. Now, it's important to note that the letters exempt the goods that are going to be covered under so-called sectoral tariffs, and that is levies imposed on goods by category of industry. And we've already seen steel and aluminum targeted by administration sectoral tariffs, and autos and auto parts as well. And we're expecting further sectoral tariffs coming down the pike, and that includes on semiconductors, which is an area that I've been following very closely, of course, but also on copper and lumber as well. And as those take shape, the trading partners the U.S. is speaking with, especially if you're thinking about Japan and South Korea, they have to factor in what the impact is of those sectoral tariffs as they try to have negotiations with the U.S. on the reciprocal tariffs we're discussing right now.
I'm waiting for news on Mexico, Canada, and Germany.
Well, with Germany, they're going to be lumped in with the European Union, and we're not expecting to see the European Union.
How do you do that, though? Because the European Union, each country is different. We don't have trade with the European Union. We have trade with individual countries.
Well, you know what that sounds like? In a way, Tim, it's actually the argument that Donald Trump would prefer to make. He would rather cut deals individually, not with a whole trading bloc like the EU, but with individual nations and heads of state like Germany, like France, as he did with the UK separately, of course, post-Brexit. But he would rather deal with nations on an individual basis rather than the EU. And he has singled out, his administration has singled out the EU for criticism over its regulatory policies, which they see as an unfair restraint on trade with the U.S., as well as things like the digital services tax, which they've criticized quite vocally as well. And then when it comes to our closest neighbors, Mexico and Canada, they are exempted from the discussion on reciprocal tariffs thanks to the U.S.-Mexico-Canada agreement that began as NAFTA and then was renegotiated and reintroduced, reborn as USMCA under Donald Trump during his first administration. Now, that deal is subject to review next year, and those talks and negotiations are underway already. And don't forget the sectoral tariffs that we were just talking about on steel and aluminum and on autos, of course. They have a huge impact on the trade we have with our two closest neighbors.
Michael Shepard, I don't know how you do it, but you do it, and we love it. Bloomberg News Senior Editor for Technology and Strategic Industries, joining us from our Washington, D.C. bureaus. 32% on goods from Indonesia, 35% tariff on goods from Bangladesh, 35% on goods from Serbia. We're getting more and more headlines now. Coming up next, stocks on the move. This is Bloomberg Business Week Daily.
listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week Daily. That's Emily Grafeo in for Carol Massar. We are getting lots of trade announcements today. 25% tariffs on Japan and South Korea, 30% tariffs on South Africa imports, levies on Malaysia, Myanmar, Laos, Indonesia, Thailand have also been unveiled, 36% tariff on goods from Thailand, a 30% tariff on Bosnia, which is less than the original 35% rate on the country, 35% on goods from Serbia, 36% on goods from Cambodia, 32% on tariffs on goods from Indonesia.
And Trump is saying that any retaliation will be met with a U.S. response. It's interesting that all of these are rolling in now 2 days ahead of that July 9th deadline, but there's already so many countries, but there's still a lot more to go, right, Tim?
Yeah, and the big ones, we had this list of like the biggest countries with the U.S.
Right. Anything in the
Mexico,
EU, Canada and Mexico.
China, Germany, anything in the EU.
And then this idea that we have this deadline on July 9th, but perhaps you'll have actually until August to actually finalize these negotiations. And as Bloomberg's Mike Shepard told us, there could be quite a bit of negotiating going on between Wednesday and the August, I guess we could call it the final deadline, before these rates are really, really set in stone here.
Yeah, we'll have to wait and see what we get from the White House on that August 1st date. But we did hear from Caroline Leavitt that the president is set to extend that July 9th deadline to August 1st.
Right.
I'm Tim Stenivek along with Emily Grafeo. Let's take a look at some stocks on the move today. We are joined by Bloomberg News earnings reporter Red Brown. Ed, no shortage of stocks to choose from today.
No, lots of red today.
Oh, look at
Nicely
that.
done. Yes, one of those stocks that was in the red today is First Solar. The ticker is FSLR, fell around 4.3%, was down as much as 5.2%. And that really is coming from we got the final version of of Trump's giant bill. This stock and all the other energy stocks have kind of been whipsawing back and forth as different drafts have come out, depending on how much that bill would be cutting the subsidies that were embedded in the IRA. It looks like they're taking more of a scalpel than a kind of a chainsaw to these subsidies. So from right now, the kind of final analysis is that home and solar storage faces strict cutbacks this year, but utility scale projects will have a little bit more runway. We'll be able to collect subsidies depending on when those projects start, things like that, through the end of the decade. So stock is down, or is actually even, or is around neutral for the year now, as a lot of this has been baked in. But it kind of does remove a pretty big overhang that's been on these stocks for a while now, and maybe can kind of get back to some normal trading.
It was among one of the worst performers in the S&P 500 for solar. Lululemon was also among one of the top losers of the day.
Yes, Lululemon, that ticker is LULU, fell around 4% today, also it was down around by as much as 5%. That brings the total losses for the stock to 39% for the year. That's within the 5 worst performing in the S&P 500. And, as you guys were just talking about, these trade deals or tariffs just continue to roll in, and it's really just a lot of pressure on stocks like Lululemon. They have I think 11%, I was looking before I came on, of their suppliers are within Japan and South Korea. So they really are kind of right in the center of this storm. Every time Trump kind of tweets something out, it's the stocks like Lululemon that are really feeling the pain.
6-7 years ago, we'd be talking about Lulu like it's, the only thing out there when it comes to athleisure. That's not the case these days. I was on vacation last week and I was actually talking to a friend who was like asking me about Lulu. He's like, what do you think of Lulu? He's like, everybody I know is wearing Aloe, Viore.
Yeah.
You're nodding. Is this the case now?
I feel like the options for premium athleisure are endless these days. Like those brands, like you just mentioned, even Athleta, I would probably put up there in that more premium brand.
Like the big
they have
names
a lot
too.
of competition, yeah.
Like Adidas and Nike, everyone else is getting into it as well.
Exactly, yeah.
Even people that you wouldn't even expect to be doing athleisure. So, and that's creating a problem for Lulu. It does seem like they have more competition. They need to stand out more, and it doesn't seem like a lot of their new products necessarily are resonating as much when you're talking about, what is it, like $150 for a pair of pants?
Yeah.
You can probably get something just as good on Amazon for whatever it may be. So yes, it's definitely another issue for the company, is not only just the cost problem that they're having with the tariffs, but also just, finding their brand within this kind of sea.
And then Roan, another competitor too, to add to the list of that premium category. Okay, finally, from athleisure to Tractor Supply.
A very easy transition. Yes, Tractor Supply, one of the few companies in the S&P 500 that was in the green today. The ticker for this one is TSCO. This one has a kind of a cult-like following. It's one of these brands that has a really passionate group of followers. I actually was on the train in Brooklyn, and there's people wearing Tractor Supply stuff because it's cool now. It does have some positive momentum and kind of behind it, and it's actually not because of this things like apparel, but it actually has a lot more to do with their food, their pet food. 30% of their sales actually comes from livestock feed and things like that, and that's great in a moment like this where there is so much uncertainty around discretionary spending. It's a really solid base of a recurring revenue stream that the company can always lean on. They don't have a ton of competition out in these rural areas where they operate.
Yeah.
So they're usually up against kind of mom and pop type stores. And so Tractor Supply looking really good heading into earnings in a couple of weeks.
There is no Tractor Supply in Brooklyn.
There's not.
I'm looking, but they have them all over New York State.
Yes, well, they have an online store as well, so you can get your hat shipped to your front door.
There we go, multi-channel. Bloomberg News earnings reporter Red Brown. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Emily Graffeo, thanks for hanging out today. You should come back tomorrow.